China cuts key costs as economic statistics disappoints Beijing. Shanghai. China's central financial institution cut key lending prices in a surprise flow on Monday to revive call for as facts showed the financial system abruptly slowing in July, with manufacturing facility and retail pastime squeezed by using Beijing's zero-COVID policy and a belongings crisis. The grim set of figures imply the sector's second large street economy is suffering to shake off the June quarter's hit to boom from strict COVID regulations, prompting some economists to downgrade their projections. Industrial output grew 3.8% in July from a year in advance, in keeping with the National Bureau of Statistics (NBS), underneath the 3.9% growth in June and a 4.6% increase expected via analysts in a ballot. Retail sales, which only just returned to growth in June, rose 2.7% from a 12 months ago, lacking forecasts for 5.0% increase and the 3.1% increase visible in June. The July statistics recommend that the post-lockdown restoration misplaced steam as the one-off boost from reopening fizzled out and mortgage boycotts prompted a renewed deterioration within the belongings area, stated Julian Evans Pritchard, senior China economist at Capital Economics. The People's Bank of China is already responding to those headwinds by using stepping-up aid. But with credit growth proving much less attentive to policy loosening than within the beyond, this likely won't be sufficient to prevent further monetary weak point. Local shares gave up earlier profits after the records at the same time as the yuan weakened to a one-week low in opposition to the dollar, and the Australian and New Zealand currencies pulled return from their recent two-month highs. China's financial system narrowly escaped a contraction within the June sector, hobbled by using the lockdown of the economic hub of Shanghai, a deepening downturn in the property marketplace and persistently smooth patron spending. Risks nonetheless abound as many Chinese cities, together with manufacturing hubs and popular traveler spots, imposed lockdown measures in July after clean outbreaks of the greater transmissible Omicron version have been located. The assets area, which has been further rocked via a loan boycott that weighed on client sentiment, deteriorated in July. Property investment tumbled 12.3% in July, the fastest fee this year, even as the drop in new sales deepened to 28.9%. L4N200MP Ni Wen, Shanghai-based economist at Wabao Trust, diminished his forecast for the third quarter gross home product growth by using 1 percentage factor to 44.5%, after the weaker than expected information. Now it is searching more and more challenging to even reap the 55.5% boom inside the second one-half. Balancing ACT in order to prop up boom, the critical financial institution on Monday all at once decreased interest prices on key lending facilities for the second one time this year. B9N2YU01J, Chinese policymakers try stability, the need to shore up a delicate restoration and remove new COVID clusters. As a end result, the economic system is expected to overlook its legitimate boom goal this year set at around 5.5% for the primary time due to the fact that 2015. Fu Lingui, NBS spokesman, attributed the July weak spot to sporadic COVID outbreaks and heatwaves in southern China that affected activity, against the backdrop of slowing global monetary recuperation and excessive inflation. In eastern Zhejiang province, the city of Yiwu, a key global dealer of small and cheap products, has been wrestling with COVID-related disruptions on and stale considering July. Many components of the metropolis were thrown into an extended lockdown on account that August 11th. We've halted manufacturing unit production for the reason that Metropolis imposed a quiet mode, said a sales supervisor at an Yiwu manufacturing facility that makes purchaser items. Fixed asset funding, which Beijing hopes will atone for slower exports within the 2D half, grew 5.7% within the first 7 months of the year from the same duration a year in advance, versus a forecast 6.2% upward push and down from a 6.1% jump in January-June. The employment state of affairs remained fragile. The nationwide survey-based jobless rate eased slightly to 5.4% in July from 5.5% in June, although adolescents' unemployment stayed stubbornly excessive, attaining a report 19.9% in July. The price reduce and susceptible activity information comes after authentic figures on Friday confirmed new yuan loans tumbled through extra than predicted in July as companies and consumers stayed wary of taking up debt. However, Wang Jun, director at China Chief Economist Forum, sees limits to in-addition stimulus and believes authorities will alternatively attention on imposing present regulations while economic weakness persists. We are actually going through a regular liquidity entice problem.